This is a fairly interesting bit of information. India has been putting a lot of pressure on the price of gold and silver, particularly gold and platinum, in the last few years because they are the world's biggest bullion buyer, without a doubt. They just recently increased the tax on gold imports for the second time this year, 2012, after record purchases widened the currency deficit. So gold immediately fell for delivery. The government will tax gold bars, the Indian government will tax gold bars and coins and platinum at 4%, India's finance minister said in his budget speech. And then their budget is going to start on April 1st, 2012. That's up from 2% set in January. So they had a 2% tax they levied in January 2012. There was no change on the silver tax. India really doesn't import as much silver as they do gold and platinum. They're heavy buyers on gold and platinum. India doubled the tax on gold and silver on January 17, 2012 by imposing a tax on imports as a percentage of price compared with the previous system of a tax by weight. Global bullion prices rallied for 11th year in 2011 as purchases by India peaked 969 metric tons. Now, this is something I've always wondered. What would happen if the currency really got hyperinflated, where gold is, say, $8,000 an ounce or $10,000 an ounce? Would not the government tax any kind of sale of gold? I would think so. And it might not be so easy for people to get around that system either, because I think there's going to be a lot of regulation and a lot of scrutiny going on with the dealers, the bullion dealers and the coin dealers that would be trading with the public as far as going from gold to currency, vice versa. I think there will be a lot of scrutiny on it. There's not too many focal points, and they could examine that pretty easily. That's one little curveball I've always been thinking about. Now, we all know that total bullion sales, this is in millions of ounces for, say, the American U.S. Mint, has been going up each year. Now, February was actually quite a drop-off, February 2012 compared to February 2011. There was actually a drop-off. And bullion sales in 2012 were not as strong as 2011, but they're starting to pick up again in March. And that probably is because a lot of the prices are dropping, too. One other curveball that come in that is possibly, well, there already is a slowdown going on in China. Now, Mark Farber says he thinks, well, he acknowledges there's a slowdown going on in China, but as far as a hard landing or soft landing, not 100% sure, but any slowdown in China will affect the commodities. J.P. Morgan Chase commented recently that China was already witnessing a hard landing, but there is people that are saying it's a soft landing. Which is one is the IMF deputy managing director, he says that they're having a soft landing right now, and what you're really seeing is mainly the housing prices being deflated because there was a runaway housing market in China, but that still tells me that they're not going to have the same amount of money to invest. Now, as far as what's going on in the metals markets right now, this is a really long-range chart, and I'll tell you the truth, I like to put it out like this because it's hard to see what's going on a daily basis. I still think there's going to be a heck of a lot of more of a pullback on this metal, and something is going on with the euro. Now, I have this set as a logarithmic, and you can see what happened to the price of silver, obviously, in 2008, as, the type of correction that went on, and the type of corrections that have been going on for all the years. For instance, $8 down to $5, $14 down to $8, $20 down to $9. So it's not unreasonable to think, we had this high of $48, $49 for it to go to $25. It is not unreasonable to think so. I know a lot of people just don't want to hear that, but I don't think it's going to be long before it gets out of that hole. Probably take a few months and it'll be back well over $33 easily. But once it hits that hole again, I figure that this is coming up. I'm sticking in with my short position on double leverage, not triple leverage, and I kind of expect it, because the euro, this is a gold chart, excuse me, the euro was rising recently, and this is basically on a weekly, but the euro has been rising lately, and a lot of times it helps the commodities markets. When the general economy is looking good, it helps the commodities markets. But when you're looking at a long-range chart, it can very easily go back down to this 120 to the dollar again. Looking at what's going on, this almost looks like this is setting up another mirror image of this side. Not that I believe too much in that, and you might say this is a head and shoulders pattern right here. I'm not going to get into too much of this type of stuff, but the reason this crashed was there was just too much fear about the euro, and I think there was something coming up with this default insurance that's going to put a strain on the banking system, and the fact that people are fleeing the banking system in Italy and Spain, going to Finland, Germany, France, and Belgium, and the money's flying out of Italy and Spain. It's telling me there's other problems going on behind the scenes. It may not happen as quick as some people think. But what I think might happen is, what might play out is that the commodities market's going to get hit first, even gold. Gold probably is going to go down below 1,500. I think this is a good bet. And then you're going to see the equities markets get hit. And I don't think the euro is going to be at its lowest point when silver and gold is at its lowest point. So there's probably might be some opportunities to short the euro even after gold and silver bottom out. But I think I will be going, if gold goes down below 1,500, I think I'm going to be going long on double leverage gold and just let it hold and let it ride from there, because it won't take too many months before that will gain some serious returns. The triple leverage I don't like unless it's for like a day trade or 2 days. It can erode too fast. You can probably get some superior gains with it, but you have to know that it's in a steady, hard bull run, and you're not going to be able to ride out dips as well with that type of leverage. I don't like that type of leverage except for short term. But there are a couple of things that are coming up, even fundamentally, that is kind of bearish for the metals on a global level, even though the American Mint is still starting to bring up the sales again. And if they were down a lot in February, even if you compared February 2012 to 2011, they had very good sales in January 2012, but they're a little lower than January 2011, but they're still way up there. But they did drop off quite a bit in February. But as far as what's going on in March, they're starting to increase a great deal. But globally, it looks like since they're starting to bring on these taxes like this, and who knows what other country may do this, that's going to hurt the physical sales, and that does hurt the general market for gold and silver. But I think what's going to way overcome that is the fact that these countries are so far in debt that there's going to be no way for them to dig out of the debt other than printing money like crazy, and that's going to drive up the precious metals, no doubt about that. But in the meantime, even though silver has been going up, I'm short on silver, I'm short on gold. They went up today. I'm also long on oil. Oil's going up today. I think oil is almost like a no-brainer bet, because right now there's 3 carrier groups in the area of Iran, and just about a month ago it was an Air Force general that stated publicly that they had plans to attack Iran, not just the nuclear facilities but also the Republican Guard and the Iranian army, and take out the entire regime. So when they're making these kind of public statements, but the other thing is the timetable fits. I don't think it's an operation for summer. I think it's an operation for spring. So it might come about in April. And when there's an attack, I'd almost I would think that would be bad for the commodities initially, for like a couple days. So leverage position on a long would not be good. I would not want to get into a leverage position long on commodities except for oil until there's an attack on Iran. And after it comes about, I think it might initially, except for oil, would go way to hell up. I think it might be bad for the gold and silver markets for a very brief time, including the equities markets, because but they will recover very rapidly, especially gold, and I expect gold to actually probably take off faster than silver. But if silver hits a crazy price like $24, $25, it's going to have a pretty hard bounce. So I might get in there for, if it does that, I might get in there for triple leverage and just ride it for a little bit, up to about $30 or something like that, and get the hell out of it, and then switch to something else, some other type of fund. But that's it. I'm holding in with my short position on silver and gold. I still think it's going down. I kind of figured today might be pretty good because of the euro bounce, but I think they're hiding something with this euro, and the situation is going to come to is going to be revealed pretty soon. And the problem probably is relating to the default insurance. I just wonder if they really do have the money to pay out. They might not. I don't know why all that money's fleeing from Italy and Spain, but certainly people have a reason for it. People don't act and move their money out of country for no reason at all. They have a fear of something coming up.